All right, now we have the market slightly down today, but it's possible this market might close up. Now, an S&P 500 has been up for 8 straight days, and if it's up one more, it wouldn't surprise me. This week is the DNC, the Democratic National Convention, and if there's any week that the stock market won't go down hard, it's going to be this week. Now, no economic data today or tomorrow, but we had earnings from Lowe's this morning, and it was ugly, brutal. Sales dropped more than 5.6% year over year, and same store sales, they dropped 5.1%, and that was actually more than expected. Now, this is the 7th straight month of sales declines, and it's no end in sight. Now, if you look at Lowe's and Home Depot, look at their earnings. That's really giving you a true picture of how this economy is, of how the consumer is doing. They're spending less quarter after quarter for about 2 straight years now. And I'm afraid it's going to get worse. As the layoffs, as they pile up, you're going to have even less spending. Now, we had General Motors announce they're going to be laying off 1,000 workers. And that comes a few days after Stellantis. They're going to be shutting down an engine production plant. Now, supposedly this is a temporary shutdown, but there are skeptics in the auto industry that production from this plant may be headed to Mexico, and that's going to be costing 600 workers their jobs. So there's no shortage of layoffs. They keep coming. Many of the earnings from the retailers, they continue to get worse. Now, the credit card debt, it continues to go up, and many credit limits, they're going to be getting cut big time. Now, we're going to have the Capital One Discover merger close next quarter, and my guess is you're going to see probably about 25 to 30% of credit card credit limits out of those two cut in half, and that right there, that's going to curtail a lot of spending. Now, we had Boeing. Their woes continue. They're going to be pausing tests of their 777X airplanes, and that's after a crack was found. And that's likely going to mean layoffs there. Now, we also have what could be a gigantic hiccup in this economy. Canadian Pacific, Kansas City Southern Railroad, they're considering striking this week. And if that happens, you're going to see a lot of production in a lot of these factories come to a halt. There have already been announced part shortages throughout the automotive industry. And we just had Rivian last week curtail the assembly of Amazon vans due to a part shortage. So this railroad strike could throw a wrench into the gears of this economy. Now, on to commodities. We had gold hit a brand new all-time high this morning, and it's since pulled back, but we're squarely around $25.50, and silver's trading around $29.50 an ounce. And in the agricultural commodities, we have milk hitting a brand new 52-week high, and we have cocoa that's beginning to go up again. And of course, coffee and orange juice, they're staying elevated, and they're having a green day. Now, we'll see where this market ends, and it could very well end in the green. And we're going to have some big household retail names report their earnings in the morning. This quick stock market commentary, please like and subscribe.